So overall, positive backdrop, as Bob just pointed out. Do you see this rally continuing into this month?
We do. If you look at what we've seen this week, we heard from Ackman, he's expecting, rate cuts now as soon as the first quarter. We heard similar commentary from Waller, and that as we're seeing inflation decline, if the Fed is not cutting rates effectively, they're having a more restrictive policy. And with CPI, the CPI report this month, if you take out food, shelter, and energy, we were up 2%. Year over year, which is where the Fed wants us to be. So we have to be patient to let that really work its way into the system. But I think that bodes well for risk assets. So we think that the Santa Claus rally has come, but we think he's here to stay for the holiday party. So I think you could see risk assets continue to move higher.
All right, Lizzie. So with so much optimism in mind, how do you see the day ahead? What's your WEX word of the day?
My WEX word of the day is catch up, and that's for today and really the rest of the year. So I think that there's going to be a lot of window dressing between now and year end with some of the big institutional managers that have been all year underweight equities, and in particular underweight the Magnificent Seven. So if you look at long positions across hedge fund portfolios, Magnificent Seven today represents 13%. Which is twice what it was in January, but still half the weight of the Russell 3000. So I think you're going to see this catch-up trade continue. There's a lot of cash on the sidelines, so it doesn't take a whole lot to move the needle.
All right, so you're also looking at some technical moves when it comes to the S&P. We're going to show the S&P right now, well above its 50-day and 200-day moving average. But you're saying there's a level that it could actually cross today that would also be meaningful. So give us a sense. What's your thesis?
From a technical standpoint, if you see the market break above 4,600, that's a very good technical indicator and a good setup going into next year. I think that for the market to move meaningfully higher in 2024, we have to see new leadership, as Bob just alluded to. With that said, we're expecting, if you look at consensus, bottom up consensus estimate, price target on the S&P for 2024, we're at 5030, which is 10% higher from where we are today. That's revenues up 11%, earnings up 5.4%. So I think the setup is good, but we need to see new leadership, more market breadth, which we've seen in the last 2 weeks to really move the market meaningfully higher into 2024.
Yeah, we're about 33 points away from that level, so it could actually happen today. I want to get to your picks for us. One of them is Schwab. So Schwab's double digits higher since a big upgrade from Piper earlier this week. Two parts of that thesis are that a lot of money is going to come out of money market accounts. A lot of people want to get their money back to work in the markets. Also, that Schwab would benefit from Fed cuts early next year. Do you agree with both parts of Piper's thesis there?
I do. And, Schwab, while it's up in the short term, it's still down 26% year to date. So where you have a lot of companies that are trading close to their 52-week highs, Schwab is still cheap. So the 2 points you mentioned are good ones. You also have the integration with TD Ameritrade. That's going to deliver some meaningful revenue and cost synergies. So I think that that's one to own.